Hello everyone, welcome back. Now we are going to deep knowledge of each candlestick. And today we are going to discuss about the hanging man. What is hanging man and where we can enter and where we should not enter. The hanging man actually looks like the same as a hammer candle. It appears is the only the makes difference. When it makes the formation of the lower of the trend, it considered as a hammer. But if it the same candle, it formation on the top of that the trend is considered as a hanging man. When hanging man forms in uptrend, it indicates that buyer has lost their strength, while demand has pushing the stock price. Means when it open over here, there is a demand in the stocks which push the price is higher, but there is one point of that day or the time frame, then the seller active and make this fresh low of this candle, and then at this level the buyers again active and push harder to close at somewhere at the higher end. While buyer managed to bring the price back to near to the open, its initially sell-off is indication that a growing number of investors think that the price was peak. That means at this level, at the some of the investors they think that that's the peak price now. And some people are believe that this hanging man candles, it actually give the opportunity to sell from the existing in long position or even go for short in anticipation of the price will go down after this, because there was a point when this seller active. Now let's jump into the chart to understand that how we can find this on this stock. And there is one more thing that I will discuss as a takeaway point for this hanging man at end of the video. So here you can see this is the candle. Now the price was falling from here, again it rise. This is the one point is last time when the price was taken support, and that actually the near. So now this price become as a resistance at this level somewhere when this it started. So when we find this hanging man candle near to the resistance, then for us we need to consider to take this as a trading. For this, always keep in mind that the body size is very important. The body size and the lower wick. Lower wick should be twice a body. That means over here you can see the body is this one, and the lower wick is the double than the body size. So this we can consider as an ideal hanging man for the short. So here how you can short, you need to wait for the activation. Activation could be below the price. In here the next day is gap down open, so I'm sure that some of the people who have missed this chance to short, but in the future you will find easily that you can have this the next day open somewhere over here and then break down, then you can sell also. The target always is the double size of this candle. So now we move over here, that you can see the next day they get this chance to sell from this level to that further down. And this is also, it indicates that people, this is the reversal sign for the trend, same as the hammer. Hammer is the reversal sign of the downtrend, and this hanging man is the reversal sign of the uptrend. So now we can go and see the further one. So here you can see this is also a one short term is going up price, then consolidation going on, and then here we can see. Now the question in your mind that why we don't trade on this one, right? Okay, because as earlier I mentioned, the body size, the wick should be double. So here this is the ideal one. Well, this candle is the ideal one. Once it's break down, we can trade. As I mentioned, the 1:2 ratio is for your target. And the thing is that we should not take this candle trade when it's create formation between the trend, neither on the upside neither on the lower side. If it formation is between that trend, we should avoid this, like such as this one and this one. So these are the things that we need to monitor for this thing. And the one thing that you need to take away for this, that if it's actual hanging man pattern, the lower shadow is at least 2 times as longer as the body. If it is not, don't enter. In other words, the traders wants to see the long lower shadow to verify that seller step in aggressively to some point during the formation of that candle. So always keep in mind to see the candle place of formation, the size of formation, and then you can go ahead. I'm sure you will get profit. Thank you for watching. See you on the next video. Bye bye.